Joining us now, Tyler Vernon, Chief Investment Officer at Biltmore Capital. Ron Carson, CEO and founder of Carson Wealth Management. Alan Valdez, Vice President of DME Securities. Let me start with Tyler. Tyler, the stock market is optimistic. I just want to ask you the push and the pull. Is it still the news out of Japan, which is always short of real information? Is it the better numbers coming out of the U.S. economy? Choose your weapon. Which one is it?
Well, I think it's a little bit of everything, Larry. I think, first of all, this is a case for central banks to keep a lot looser policy for a longer period of time, which is generally more bullish for equities. I think the fact that we didn't go into Libya at this point was also positive, and things look to be getting a little better over there in Japan. So I think it's a culmination of everything that's making people realize that the valuations here look attractive, that the economy is continuing to do well, and as we look forward over the next couple months, this shouldn't really affect our numbers in any large case.
Ron, have we taken our eye off the Middle East a little bit? Is that going to come roaring back and become the main focus again? And how does that impact your investing?
I think it could. I mean, there's geopolitical events are going to be with us every day this year and for the next several years. But I think what overrides that is the Fed's unprecedented printing of money by buying government bonds. You know, in the short run, we'd use this as an opportunity to light up on your equity positions or add hedges to the portfolio. I think it'll set up for a much better buying opportunity, primarily outside of the United States. So, you know, short-term bearish, long-term fairly constructive, and I think it's going to be primarily driven by the world being awash in paper, not the things that we need, you know, food, water, and energy, but you know that's the game right in front of us.
Okay, Alan, let me ask you this. You see the leaders today, banks from the dividend play, but you also see industrial stocks and commodity stocks. What is your read on why they are leading?
Well, I tell you, Larry, I think this has probably been the busiest week I've seen in years in regards to Newsweek. We had a week ago the earthquake, the tsunami, then we had Libya, then we had Saudi Arabia, Bahrain, and we have oil over $100 a barrel, and yet this market's only down a little over 1% in this whole week. I mean, I think the whole thing just shows you the economy, the growth globally is still here and it's going to continue. So I'm not really concerned about this market taking a little dip this week. I think this market's still on an upward swing.
Alan, we're looking at the financial sector right now. Is that dividend increase or bringing back the dividend, is that already baked into this price, or do you think that those stocks rise from here? Oh,
I think the stocks should rise from here. Remember, also, the financials are 20% of this S&Ps. So you get a rise in the financials, you're going to get a rise in the market also. So that was a great news out today on the interest rates. That was a great call.
Ron, why are you such a short-term bear? What is driving your thought on that?
Well, I think you look at earnings. First of all, the market is not inexpensive. I know that's conventional wisdom, but the Schiller earnings are currently 24 times earnings. Plus, we've had such a huge move up here in the short run. And, you know, the market, yeah, it went down because of the horrific things that happened in Japan, and our hearts go out and prayers go out for everybody in Japan. But the reality is this market was looking for a reason to correct, and it just got too far ahead of itself. We do think once this correction's over, and I think that we will see lower lows here, you know, this year, that'll be a time to set up for a better move.
It's really what, just a 2% correction, net. I mean, that ain't much.
It's not much, but it's done some technical damage to the market. And here's the other thing that's going on. You're seeing a massive amount of money coming out of money market and bond funds. And unfortunately, it's retail investor who historically has invested right at the short-term tops in the market, only to be, you know, scared away. And we think there's an 8 to a 20% correction setting up here. And that's probably where they'll re-exit the market back into, you know, short-term bonds, only repeat the cycle all over again.
All right, fair enough. 8 to 10% correction. Anyway, gentlemen, thank you, Tyler, Ron, and Joe. When we come back, Libya declares a ceasefire after the UN okays a no-fly zone.
We're going to discuss what that means for oil prices ahead and whether you should buy into oil stocks right now. You're watching CNBC, First in Business Worldwide.